What is up, you guys? Nick here, and in today's video I want to discuss a very interesting and unique company making big moves in the stock world as of recently. This company is called Actinium Pharmaceutical and trades under ticker symbol ATNM, traded on the NYSE American. I've told my subscribers before that I really do think the healthcare sector is currently extremely undervalued when compared against other sectors. With the economy emerging from the current health situation, governments and consumers are going to be much more apt in allocating assets toward pharmaceuticals and healthcare in the coming years. And Actinium Pharmaceuticals is a very interesting, emerging company focused on unmet medical needs. Before we start, Webull is doing a promo. Check it out using the link in my description for free stocks worth up to $3,700. If you haven't yet, make sure you hit the subscribe button. I do a ton of videos like this covering innovative disruptor companies that will be poised to dominate in the future landscape. Smash the like button for the YouTube algorithm, I'd really appreciate it. And without further ado, let's get right into it. I'll first be giving a quick background on the company, what they are trying to accomplish, and then finally take a look at their financials, their balance sheet, and their charting. Alright, so a quick background. Actinium Pharmaceuticals is headquartered in the United States and was founded in 2000. It is positioned in the clinical stage trials and develops antibody radiation conjugates. They are currently positioned in the potential treatment of relapsed or refractory acute myeloid leukemia using a promising drug candidate. Their lead asset is Lomab-B, currently in phase 3 clinical trials. Although I do in fact have a science degree, I realize that many of you likely don't, so I'll break down what this is in layman's terms. Acute myeloid leukemia, or AML, is a particular type of cancer that affects a particular type of cell line called myeloid. AML is a rampant type of cancer resulting in 147,000 deaths globally. Current treatment for AML typically involves radiation and types of chemotherapy, and there is a cited lack of cohesiveness within the treatment of this disease, with the only exception of hematopoietic transplantation (HCT) as the only potential curative treatment option for patients achieving a second complete remission. There's not many things for patients to currently do. All of these therapies and treatments are quite extensive and burdensome. Now, what Actinium Pharmaceuticals is attempting on doing is potentially treating AML in a less invasive manner through the use of a drug treatment. Their current drug candidate has a remission rate of approximately 86%, with 71% of patients achieving negative minimal residual disease status upon the second dose of the drug combination. Now, this would undoubtedly be incredible if it is possible to come to fruition, as the current 5-year survival rate is only about 35% in people under 60 years old and only 10% in people over 60 years old. So we can see how dire the situation is and how a potential drug candidate with 86% remission rate would be a large step in the right direction. This 86% remission rate is much superior when compared against industry competitors. We can see other drug candidates having performed far less, only hovering around the 40 and 60 percentage points in terms of remission rates. Going to their financials, we can see that Actinium is very underleveraged, having far more assets to liabilities, with the Altman Z-score of 11.8, showing minimal bankruptcy risk. They are a small cap company with a market cap hovering around 150 million and have a slightly higher beta than the overall market, showing some volatility. 2020 has been quite substantial for this company in terms of their market cap, having exponentially increased in just the past few quarters. They have 48.3 million in total cash and only 877,000 in total debt, with an absolutely fabulous current ratio of 10.51. This really is quite enticing as they are so underleveraged. They currently have a recommended rating of 1.8, sitting in between strong buy and buy. They have an absolutely massive average analyst price target far above their current, sitting at just south of $40 per share. They have relatively low operating expenses of around 22 million for 2019 and 20 million in 2020. However, it should be noted that as of yet, they have not generated revenue. They recently beat earnings in Q3 2020, posting an EPS of negative 0.36, beating analysts by 8 cents per share. Analysts have a predicted EPS set for next year, 2021, of negative 1.41 compared to their current year of negative 1.86, indicating movement in the right direction. The stock price has seen a nice gentle increase since hitting lows in September, up from 7.26 to now hovering within the high 10s, having enjoyed almost a 50% gain. Since bottoming out in April, the stock has more than doubled, and this could be an enticing entry point for long-term investors. The company has a relatively small float, therefore when good news is released, the stock can typically see large single-day jumps, but also remember that the opposite can be said as well. Many analysts have initiated on the stock and upgraded their ratings. H.C. Wainwright initiated a buy rating, and with the analyst consensus hovering just under the $40 mark and a high price target within the $60 per share range, this could potentially grant large gains. Actinium's capital increase in April may have potentially lowered the possibility of future shareholder dilution, which of course we as shareholders do not want to happen. So with this increase in capital, it's less likely that they will be further diluting these shares down. Looking at their share price, we can indeed see investor interest growing within this company. Coming down from its extreme highs earlier this year, its current trajectory is edging its way back up. This is quite classic of a low-cap company. You will see that increased volatility within a stock on a month-to-month, week-to-week, and day-to-day basis. So investors do like when they start seeing these upward trajectories while the share price is still relatively low. When evaluating a company to potentially allot your capital into, it's always wise to analyze the company's management. Their CEO and chairman of the board is Sandesh Seth, with over 20 years in investment banking and equity research within the pharmaceutical industry. He's previously been the chairman of the board of another publicly listed therapeutics company. Their lead independent director is Dr. C. David Nicholas, having served in the role since 2015. He has a lot of experience in research and development, R&D, and focuses on maximizing effectiveness and establishing competitive pipelines with innovative drugs. This is key. They are always looking for the next drug that's going to be potentially groundbreaking and a drug that is meeting an unmet market. Finally, they have Dr. Ajit Shetty, the director, who has 36 years of experience at Johnson & Johnson, another pharmaceutical giant. So there are clearly management who have experience in the industry and who have proved themselves in the past. There are so many interesting aspects to this company. However, I am not a financial advisor, and you will have to formulate and come to your own conclusions when regarding any stock. Gain as much research about a company as you possibly can and do your homework on a company, especially small cap companies. They are very interesting in that they are meeting this currently unmet need. Patients would likely much rather take a drug candidate rather than going through radiation and chemotherapy treatments. A drug treatment is much less extensive, easier to take, and they are showing great remission rates with up to 86%. This is quite promising. I really do like the fact that they have far more assets relative to the liabilities. They're not really risking going bankrupt. They do have that nice Altman Z-score of 11.8. They have a low float. There are very interesting aspects to this company. Anyways, everyone, I hope you enjoyed the video. I hope you enjoyed the analysis. Hit that subscribe button if you haven't already. Smash the like button for the YouTube algorithm. It really helps out the video. Anyways, I will see you all in the next video. Cheers.